Hello everyone, and welcome back to Real Estate No Dumb Questions. I'm Leah, and today I am talking with Cassidy Burns, owner of BPG Residential. Thank you so much for taking the time with me,
Thanks
Cassidy.
for having me.
You started out as a personal trainer.
Correct.
How did you make the leap into real estate?
Yeah, so I started as a personal trainer and was working with higher end clients, and one of my higher end clients was Trent Heminger. Trent Heminger
That's how you met
decided
Trent.
to hire me and take a chance on the long-haired personal trainer.
You had the long hair at the time?
Yeah,
How long were we talking?
I had a man bun. I was mid back hair. That was part of my style. But yeah, I was an Equinox out of Bethesda, and Trent offered me a position to join as a real estate agent on his team, and that's how I got started in real estate.
Did you have to lose the man bun?
I made the executive decision to lose the man bun.
Okay,
Yes.
all right. Probably a
Yes.
good idea
It
getting
would've-
started. And
Yes, it would have been very hard to get into the market at that time as a 24-year-old with a man bun.
Well, you never know.
Yeah.
Maybe it could have gone a different direction. Since you bring up Trent, there was something I wanted to ask you specifically about that. What was the number one thing that you learned from him as your first team lead and mentor in real estate?
One thing that Trent made me do, and I actually do this with my agents as well, is he forced me to purchase my first house in order to join his team. So the language he said, if you're gonna become a broker, you have to broker your own deal first. So I bought my first 3-bedroom, 3-bathroom condo, and that's what gave me the bug to start buying more.
So smart.
And I use the same thing with my agents as well. So within the first year, all of our agents on BPG Residential need to start the process of buying their first property, whether it's an investment or a primary residence.
Super smart. I love that. So what was your very first investment property and what did you learn from it?
Well, so the first property was that condo that Trent made me purchase in the 16th Street Heights on 14th Street, Northwest DC. I think it was an ERB build, new construction. I used an FHA 3.5% down loan on that, but 3 months following, I was becoming obsessed with the concept of cash flow and investing into real estate. I bought a duplex for $30,000 in my hometown that we went in and renovated the property, and we learned a lot of lessons because we didn't understand construction, we didn't understand property management, but the only way you can really get into this business is through gaining real life experience. So I learned a lot on that first $30,000 house, and that has compounded into many more houses following.
I love it. That's awesome. So how do you choose to finance your deals? Are you doing hard money, personal capital, partnerships?
It's changed throughout the years. At first, I was just going through a bank and getting a bank loan, and then I'd bring the remaining equity. Then I started raising some money from partners or individuals that were in my sphere of influence, that we pay them a preferred return. They would get percentage of ownership. But now we are raising funds. So we have 2 funds that we're actively raising for. So we bring limited partner investors that they invest equity into our company, BPG Holdings. And then the remaining, from a debt perspective, we'll go to the banks, we'll do hard money, we'll do seller financing, whatever makes that deal work. Every deal is a little bit different, but now we're raising a lot of money to help with the equity portion.
So how do you find the best deals? Is it through wholesalers, the MLS, off-market properties?
So again, things have changed. At first we were all single family, small multifamily condos. So that was a lot of MLS, and then relationships with agents. But now, as we're getting bigger and more into the commercial world, commercial relationships with brokers is the most important thing. And then also, I've hired a full-time acquisitions associate who helps underwrite and source these deals as well, Peter Firehawk. He's done a tremendous job for us. But the relationships with the brokers, and then Peter out hitting the grounds and building even more relationships direct to seller and direct to broker is really where we're finding most of our deals now.
How do you evaluate whether or not a property is a good investment?
So there's 4 different things that we're looking at.
Okay.
It's the cash flow, it's the potential appreciation, it's the current rents in terms of what the net operating income is, and then it's the future rents of what the net operating income is in the future. Obviously, there's tax benefits to buying real estate, but we're not underwriting that when we're buying properties right now. But yeah, we're looking at what is it at in its current state, and then what is our business plan to execute for the future. Some are more cash flow plays. Some are this location is too good not to purchase, and we're going to let time take its course.
You mentioned out of those 4 things, one of them was appreciation. How are you able to determine if a property is likely to appreciate versus depreciate?
Yeah. So we'll talk about 2 different ways. So
Sure.
residential, you can just look at the comps. So if you're buying a property for $500,000 and you know the ARV, the after repair value, is $1 million, if we put X amount in construction, that's forced appreciation because you know that there's a spread there for you to achieve. Now, commercial is completely different. Commercial is based on cap rates. So everything is determined on the current NOI, net operating income. 2 ways: you increase rents, decrease expenses. So if we know that a strip center is trading at 6% cap rate in Harrisonburg, Virginia, we can't change what cap rates they're trading at, but we can change the income that's generated, and we can change the expenses that are on a monthly basis. So we're looking at, can we decrease expenses and increase the income?
Totally different for a residential
Totally
versus
commercial.
commercial.
Yep.
It's really good to know. What would you say is better for a beginner? A single family rental or a small multi-unit property?
I would actually say in this market it's a condo. Yes, multi-bedroom condo. Multi-family is going to be very, very hard in this market. It's just people can't afford it right now.
Yeah.
And just because you can't afford it now doesn't mean you shouldn't buy something now.
Yeah, I agree.
Yeah.
So for someone who is on the fence between renting and buying, what's the first thing that they should consider?
Probably your monthly expenses. So if you're looking at renting and your rent is $2,500 a month and that mortgage is going to be $3,000 a month, you need to be able to afford the $3,000 if you're going to be buying something. But also you have to understand that of that $3,000, a percentage of it is going towards your principal. So it's your forced savings account. But you need to be able to afford it. Don't put yourself in a position where you can't afford your living situation. It's not a fun place to be house poor.
Yeah, completely agree. So let's say that someone is scared to buy their first place. What is the no dumb first step that they should take?
You need to see how much you can afford, but then also you have to realize that you should be scared. Every time I go to Allied Title to the closing table, my palms still get sweaty every time I'm going to sign on loan documents to buy a property. It's the unknown, right? You can't predict the appreciation. You can just have your business plan and have your plan for what the execution is going to be. So you should be scared. If you're not, then you're probably not doing the right thing. But the first thing is just see how much you can afford.
Yeah.
Right, and that's talking to a lender.
Yeah, I agree. In your experience, what is something that you find buyers always worrying themselves about that they really don't need to worry about?
PMI, private mortgage insurance. It's the cost of doing business. In this market, the DMV market, the price points are high. If you're a beginner house is $500,000 to $600,000. That's a significant amount of money. In order to buy it with 20% down, you have to have $125,000 in cash saved. I know when I first bought my first property, I had $25,000 saved, and that was a big feat for me to get to have that amount of money in the bank as a young kid.
Yeah.
PMI is just the cost of doing business, and you have to pay it no matter what. That's the bank saying, hey, we don't trust you because you're not this is our insurance on you because you're not as well qualified as somebody that has a lot of cash.
Yeah.
So don't worry about PMI as much. It's something that it's inevitable, and you just have a plan to get rid of it in the future.
Yeah, I could not agree more. How do you find good tenants without getting burned?
Well, you have to abide by fair housing laws, right? And you have to treat every tenant the same. But the key is the process of how you are vetting their applications. Tenants and placing and making sure that rentals are successful is all about the upfront process. So when you are showing and or putting your property up for rent, don't just take the first person that applies. It could burn you. You have to go through the credit check, the background check, the income verification, the job verification, making sure that you're touching base with their past 3 landlords. Accumulate all the information, even if it does cost a few more days of vacancy. It's better to have all the information so at least you can make the most educated decision. If you rush into it, you always get burned. And then also don't bend on your metrics. Every time, our metric is you have to make 3 times the monthly rent from income. So if the rent is $1,000 a month, they have to make $3,000 as a family in order to qualify. It's not $2,999 because every time that you bend, you'll get burned.
So what is your strategy for spotting rental opportunities in a competitive market?
So a lot of individuals that own rental properties have owned them for a really long time, and they have not continued to increase the rents to where the market value is. Or maybe they haven't done the renovations necessary to achieve the market value. So we like to buy stuff that is under rented because we know that we're good at property management, and if you just put a little sweat equity into the construction, you can get now that property that is under rented up to market rents. And there is your value add strategy.
Can someone buy a primary residence and turn it into a rental later? And do you think that's a smart move?
Yes. The seasoning period is typically 365 plus 1, so you have to live there for 1 year. If you don't, that's fraud, the F word. So make sure that if you're buying a property as a primary residence that you are abiding by and living in that property for the time that you said you would. But afterwards, after that 366, you can turn that into an investment property, and the same debt stays on the property. So that loan you got as a primary residence now is the loan that you will have on it as it's an investment. You probably will have PMI still, right? Because you hopefully put 3 to 5% down on that primary residence, and that's one of the best lever points is that you can put low money down on something, you live there for a year, and then you turn it into an investment and you do it again.
Yeah, and then that tenant is paying the mortgage for you.
Correct, yeah.
I love it. That's great. Okay, so self-management versus hiring a property manager. Can you please walk us through what self-managing actually entails and if you think hiring a property manager is actually worth the investment?
I think it depends on what your business model is, one, and what knowledge you want to have, two. So I believe, and I became a better real estate investor because I managed my properties myself, self-managed at first. I was able to learn the hard lessons, but also they're very, very hard lessons. And if you don't have the contacts, plumber, HVAC, electrical, handyman, locksmith, then it's going to be a long year or years that you're managing the property. Now, if you are looking for something to be more passive, hiring a property manager is a very, very low cost and barrier to entry. Our fee is 9% of the monthly rent. So if it's $1,000 a month that's rent's collected, you're only paying us $90 a month to have access to our Rolodex of contacts, for us to handle rent collection, rent distribution, and most importantly, the vetting of the tenant on the front end. We already talked about how important that is. If you don't have processes in place or softwares in place or have a third party that's looking at the income and the credit, you're going to have a tough time and you're just guessing. All of that's included in the fee. So I think if you want passive, hire a property manager. If you want to learn the business, do it yourself, and then hire a property manager. Because in the end, property management is a different business than investing into real estate.
So when someone says to you, I want to start investing, what is your first question to them?
How much money do you have? One, because there's different buckets and pools of investments that you can go into, and the amount of capital you have is going to be the most important thing. And then two, what's the long-term vision, right? Are you buying stuff to have and keep for the next 30 years, or are you looking to just get rich quick? If you want money now, you should probably be a flipper, right? If you want money in the future, I talk about being the cool uncle. Being the cool uncle means that you buy the assets now, and then 30 years from now, when your families are getting together and they come to the beach house, you're the cool uncle that owns the beach house that they can all get together. So you have to look at what is the vision for you, for your family, for that.
Yeah, I like it. How much would someone need to realistically start investing in real estate?
If you want to buy the primary residence route, you need 3 to 5% down. I guess I can go through the different ways that you can invest into real estate. That kind of goes back to the last question, is if you want to buy a primary residence and you don't own a home, you can buy it with 3% conventional, 3.5% FHA, live in it for 365, and then move out. It's a low barrier to entry. $500,000 house, you need 15 grand. So there's your $15,000. We'll figure out a way to get your closing costs covered. Next is you're just going to buy an investment property. There are products that you can buy with 15% down, but mostly you're going to need 25% down to buy that investment property. Using that same $500,000 example, that's $150,000 that you're going to need. Huge amounts of money there that are differentiate. The third is you can invest into syndications or funds like we do at BPG, and then you have to just hit the minimums there. So you can invest from $25 to $1 million. So really there's different buckets, and it also goes back to the lifestyle. Do you want to have to be worrying about the tenants, or do you want to delegate that out?
Yeah.
But $15,000 to $200,000 is a good barrier to entry there, and you have to decide what type of investor you are.
Can you define the term house hacking? And is this something that you've personally done?
House hacking is when you take a portion of your house that you currently live in and figure out a way to generate income off of it. Yes, I've done this. I've done this with 3 different transactions. So I first bought the first condo that we talked about. I rented out the rooms. Right, so it wasn't a duplex. They lived in under the same roof as me. Rented out the rooms for a dollar amount. Next, you can buy the duplex, and then you rent out the space that you're not living in. So again, they're mitigating expenses. And third, you find other ways to generate income off of the asset. That could be renting out the parking space. That could be if you live in the Shenandoah Valley. That could be using the lumber to generate income off of. There's ways that you can generate income that doesn't have to be somebody living in your house.
That's really good to know. So what exactly is a 1031 exchange, and how is it beneficial for investors like yourself?
Yes. So 1031 exchange is a tax loophole and benefit that the government allows us as real estate investors to take advantage of. So this is when you can kick and roll that gain that you have seen and realized on your property into another property. So you have house here that has appreciated. You then sell house, and then you have 45 days to identify and 180 days to settle on the following house, but you don't have to pay the tax that on the gain that you realized. So you're able to roll that benefit into a bigger asset, and you just continue to trade up and up and up. And then once you die, that cost basis goes away, and it's passed on to whoever the next generation is.
That's awesome.
Yeah.
I think that's a great method. So you were talking about this a little bit earlier about how being an investor has made you a better agent. Can you talk about that a little bit more, and maybe even vice versa, how both of those things have helped you in your business?
Yes. So I started as an agent. I wasn't I didn't go straight into real estate investing. I used my agent platform as a tool to help me become a better real estate investor, and then being a real estate investor helped me become a better agent. Mostly because I can now give real life experience and advice to our clients, and now with agents on our team, I'm able to help and teach them and pass down my experiences to them and give them real life examples so then they can help their clients. I think you need to practice what you preach. A lot of times agents don't own real estate, or they just own their primary residence. And I wouldn't, going back from a personal training background, you wouldn't hire an overweight personal trainer or a tattoo artist without tattoos. So why would you hire an agent that's not actually actively transacting in real estate?
That's so true. I think that makes so much sense. So what should people look for in an agent when they're looking to buy specifically an investment property?
Market knowledge. I think you need to have boots on the ground. So that goes back to the last question of, you probably should work with an agent that owns a property in that market, right? In whatever market you're in, whether it's the Northern Virginia market, the DC market, Shenandoah Valley, Charleston, South Carolina, you should work, those are the markets that we're actively licensed in. You should work with somebody that actually owns property there, that understands the municipalities, where the rents are. I think that's really important. And going back to the rents, somebody that can give you actual comps of what that property will rent for. So even if you're buying it as a primary residence, you should know what that property will rent for today, just in case something happens. You never know if you have to move back because of family or whatever, your job gets relocated, and maybe it's not the right time to sell that property. You have to know what it will rent for, so you have to know what your basis is going to be from your debt service, from your mortgage.
So what would you say was the worst investment that you ever made, and what did you learn from it?
I've made a few, and most of the time it was because I bought the cheaper house. The reoccurring thing as I become a more experienced and well-versed investor, I always wish I would have bought bigger. Going back to Trent, who was one of my mentors, he always says that you need to buy when you have access to capital. That's when you should buy. You shouldn't try to time the market. And when I bought these properties, the duplex in Noma, for instance, I could have bought a bigger duplex, and I wish I would have. I bought the $900,000 duplex when I probably should have bought the 1.2, because that asset was in a better location, generated more income. So don't just buy it because it's cheap. Buy it because it's in a great location and you have the business plan that you know you can execute on it.
If you don't mind me asking, were you just trying to eliminate some potential risk by buying the smaller one, or was it more of a money thing, like this is what I had for
the time? At the time I had the money. And I could qualify. I think it was just I was scared going back to, even though this was probably my 60th property that I was buying, I still was scared to go into that bigger price point. So my advice would be, obviously you need to consult with people too. Like, don't just buy the bigger property just because it's bigger, right? It still has to make financial sense and the numbers have to work. But if you have access to the capital, you should try to buy the best possible asset that you can with that money. Yeah, but I was scared.
Well, and you were saying earlier, if you're not scared, something's wrong. Like, it should feel scary. Since you also run a construction firm, what is a common renovation mistake that people make?
Not going bigger with or better materials, right? Don't just buy the flooring because it's cheap. Spend the extra $1.50 on flooring or the better quality paint, the nicer decking material. So buy the better materials.
Would you say it's better to go with the better material, the better quality, or like what's hot and trending right now? If that makes sense.
Yeah, I think you need to do both. But because there's the hot and trendy stuff now is the black cabinets, right? Like the black cabinets with gold. If you're going to do that, don't just paint them black. Go with the higher quality cabinet.
Got it.
I think that you need to think about it from a longevity perspective. If you're going to own the property for the next 10 years, you don't want to have to replace it twice.
Yeah.
So do better quality stuff.
So I personally love your story of how you got into real estate, but if you had to start over, how would you do it again?
Going back to the question, I would buy the bigger property sooner, and I probably would have bought more when I had a W-2 income doing both. So when I was a personal trainer, I had a great solidified income. I was very lendable. But as soon as I went full-time in real estate, that clock starts over, so it made buying properties even harder. So I think that there's a lot of value in the person that wants to get into real estate, wants to start selling and buying stuff. You need to have that solidified income, whether that's working for a property management firm, whether that's working for a construction firm, so you can get loans. So then you can buy more property.
What would you say is your biggest rookie mistake?
I lent money to a developer in DC, and he stole $75,000 from me.
Oh, God.
Yes.
I assume you didn't know him?
I did know him.
So that wasn't the mistake then.
The mistake was I allowed someone to sell the dream to me. I was very young, and I was very wanting to get into development, and I gave him $75,000, and he robbed Peter. I was Peter to pay Paul. So that was a rookie mistake. So make sure the relationships you have to trust the people that you're doing business with.
Yeah, it's everything.
Don't jump into it. Be very, very analytical about that.
I was actually just talking with an agent about, while we're talking about trust, I was talking with an agent the other day, about the most important thing people should be looking for with real estate agents. And I always tell people, because I get people asking me all the time, who should I use? What realtor should I use? I always tell people it's not about the numbers. It's not about their volume. You're not looking for the agent who sold 100 properties last year. You're looking for someone who you can build trust with.
Yep.
Someone that is going to guide you through the process. And so it sounds like the trust might not have.
Trust is not there. Yeah. It's people, not property, I think is a good saying. It's the people that you are working with, or the people that you're putting your trust in, is the most important thing. The property is secondary, right? Obviously every agent has access to the same amount of properties. I guess there's the big Zillow issue now, is maybe some don't. But it's about the people that you're associating yourself with. And in this case, the person that I associated myself with is not a good person. Yeah.
That's rough. I'm sorry. Okay, this or that. Long-term rental or short-term Airbnb?
Long-term rental.
Why?
I'm a long-term. It's part of my long-term vision and goal. Short-term rentals, they are great for income now, but I don't know where that market's going to be. People have owned rentals for hundreds of years, so that's the business model I'm going with.
Okay, I like it. So renovations with the best ROI.
It's paint and flooring for the interior of the house, and then for the exterior of the house, I think it's power washing. Yeah, so paint and flooring, interior, exterior is power washing from an aesthetic perspective.
Not an agent, but I totally agree with that. I remember when I was buying my condo with Rick, one of the things I was so turned off by it when we first walked in, and as I've told you, I didn't want to buy the place at first. And I walked in and the paint was just awful. Just not a color I would have chosen. One of those sort of yellowy brown colors on the walls. And so when he took me back to the property to help me visualize what I wanted it to look like, that was the first thing he said. He's like, this paint sucks. Yeah. If I had staged this home, this would never be the color, but imagine it white, imagine it gray, imagine it this. And that's when I started saying, okay, now I can see the blank canvas. Now I can see myself being in here. Yeah. So
and that was
I agree.
That was your value add. So he helped you probably increase the value.
Yeah.
Just by throwing paint on it.
100%. What is your dream property to own? Anywhere, any budget, no risk. You're not thinking of risk in this.
So I don't think this is risky, and eventually this is going to happen. I'm going to do it. I'm hoping within the next 4 years. It is a Charleston, South Carolina beach house, triple level, decks off all 3 levels.
Oh my God.
Pool. And then you can walk the dock, to the boat.
Oh my God, we need an allied retreat at your beach
That's
house.
That's part of the plan. Yeah, all our investors are going to have access to it.
That's a good dream property. I like it. I fully support you, Cassidy. Okay, last question for you today.
Okay.
If someone is watching this and they are nervous to start in real estate, what would you say to them?
I would say that you need to talk to individuals that have been doing it for a long time, and put yourself in the same rooms with them. So I'm going to do a pitch to our investor meetups that we do. I think that that's a great place to start. Every single month we host an investor meetup in this office. There are 30 to 50 people that come, that some are terrified and are brand new. Some own $100 million worth of real estate. And you can learn so much by just asking really good questions and just looking somebody in the eye and shaking their hand. And I think that is, if you really want to get in the business and you're serious about it, you need to put yourself in those types of rooms. And this is a really good room to start with.
Yeah, I agree. Thank you. Cassidy, thank you so much for taking the time to answer all of my questions today. I think this added a lot of value, and I'm excited for our viewers to learn what they can from you.
Yeah, thank you for having me.
Thank you.